Hello, everybody. I am here today with a great friend of the foundation, Sherman McClellan, widely known to everyone in the technical analysis community. And I'm just very happy to be having this conversation today, have the opportunity to have this conversation with you, Sherman, and to share with the followers of the foundation some of your work and some of your history in the markets and your history with the foundation as well. So thank you so much for joining us today.
Well, we're glad to be here, and we've done work with the foundation for quite many decades.
I was looking at your background, Sherman, and noted that you actually did your academic work in business and economics.
That's correct.
And was that at Claremont McKenna?
At Claremont Men's College, which has now been integrated with women and is now called Claremont McKenna College. Yeah, but there were about 4 graduating classes where there were women graduating from Claremont Men's College, and the college offered them a revised diploma with the Claremont McKenna, and I don't think any of them wanted it. I don't think any one of them took it up on. They were really happy to be a woman graduating from a Claremont Men's College.
It's funny. I actually lived near Claremont myself for a short period in my life. I remember it was a very beautiful place, very leafy campus, and must have been a great place to go to school.
We enjoyed it.
So it made me wonder, though, about when you first encountered Dewey's work, right? Dewey was an economist. And Dewey was an economist who felt that there was something missing from economic science. So did you resonate with that when you first encountered Dewey's work in the Foundation for the Study of Cycles?
We didn't do that in college. This was something that after we got started looking at indicators and got into creating a McClellan Oscillator and Summation Index area, and that was at the beginning of 1968. We subscribed to Barron's, and I have all the issues from Barron's from January 1, 1968, and at least all of the market laboratory parts of it.
So it's 1968, and you have a background in economics, but you feel like something's missing and you have to go and develop some new indicators or new techniques.
The economic theories that they produce or we studied in school were all about profits, and they didn't tell you that when the market was going up or down, or when to buy and sell, or any of that kind of stuff. They were all buy and hold people, and there was only that aspect of things. And we found out the real world is very different. And the year that I graduated from college in 1958, 25% of all the customers men who were the salesmen for brokerage houses were laid off. And that removed that as a possibility for anything that I was going to do. So I've taken a different route through to sort out how do you time the market. And that's not something that's taught in economic theory at Claremont Men's College at the time I was there.
Right. So it's 1968. I mean, this is the early stages of technical analysis, right?
Very early, yes.
And so what existed at the time, and what did you develop kind of to enhance what other people were doing?
The thing that we looked at different indicators, and we found that the advanced decline line was very closely correlated with the stock market. And we figured if we could figure out what the advanced decline line is doing, we could figure out what the market's doing, because the market has different peaks and valleys, and it's very hard to tell where a top is. yeah, there's support resistance levels, but they blow right through those easily. But the advanced decline line, I figured would give us really a good opportunity to understand the market.
And
And
just
so
for the sake of,
what could we do to understand the advanced decline line? And that's how we attacked it.
what is the advanced decline line?
How many stocks are up advancing or have a higher price on a particular day or a particular week or a particular month?
Mm-hmm.
Uh, and how many are going down in that same time period, and the difference between them is an advanced decline line.
And is
We're
it
working with a
typically,
daily advanced decline line, but
mhm.
we also keep track of a weekly advanced decline line because that's reported in Barron's.
And do you normally, I normally hear the advanced decline line associated with the New York Stock Exchange stocks. Is that right?
Yes, there's all kinds of advanced decline lines for all kinds of different sectors of the market. The advanced decline line for the New York Exchange is the preferred one. On the NASDAQ market has a lower capability or requirements for membership,
Mm,
and there are a lot of NASDAQ companies listed that fail and are delisted for various reasons.
mm-hmm,
And so
mm,
the advanced decline line on the Nasdaq has never made a new high. It's only declined and has counter trend rallies
hmm.
as advancing phases are put
Hmm.
in. So
I've always,
it's not a good market to work with.
I've always wondered
Good
why the New
indicator.
York Stock Exchange was kind of a focus of your work and of the advanced decline line in general.
The high yield bond advanced decline line is a very useful
Mm,
advanced decline line because it's very closely correlated with the stock market.
mm-hmm.
Because the speculative money that goes into stocks also goes into high yield bonds. And so we follow that particular advanced decline line.
Okay. So others were, the advanced decline line was something that people were already following.
Oh, yes.
You said, well, it's highly correlated to the stock market. So if we could get some more insights into the advanced decline line, maybe we could actually time the market with it, right?
Right. That's what
So,
and we wanted something that was very fast, that gave us a response the next day or 2 days at the worst. Uh, and normal uh, moving averages can't give that to you. And so we went looking for exponential moving averages, and we found that those worked better. And but they weren't as perfect either. But we found out that if we used the difference between two different moving averages, the exponential moving averages, that gave us insight that we couldn't get any other way. And
and
that's
that was the birth of the McClellan
that was the
oscillator.
birth of the oscillator. And we played with different. We used a 10% trend and a 5% trend, and we played with all different kinds of different moving averages, and all of them have the ability to give us false moves, and but these gave us the least amount of any of them, and were easily calculated. This is in the era before computers and before calculators.
Right.
But abacuses were used by Marian.
Yes, I know your wife, Marian, your late wife, was very involved in this work. And from what I understand, she was the more mathematical of the two of you. Is that correct?
She was going to Pomona College when we met,
Mm-hmm.
and we met at a square dance and class,
Love
and
that.
uh, she was one of the four math majors, female math majors at Pomona College in her class. And she worked at Rand Corporation and JPL and Naval Ordnance Lab in Corona, and she had the title of computer. This is before computers, and so
Yeah.
her title of work was computer.
I remember that movie about the moon missions of NASA and the computers that were working
Yes,
on, those early days, which were often mathematician women.
that's right,
That's
and
funny.
very bright women too.
Yes, indeed. And I can I have a feel for what you're saying of the pre-computer age because here at the foundation we have Dewey's Archives, and I see, that the meticulous handwritten data collection and data analysis.
Yeah,
It's really
Gertrude
beautiful to see.
did amazing work, and now your computer program for the foundation can do what took her a month
Oh,
to do, and
yeah.
get that done in a few seconds.
It's mind-boggling, isn't
It
it?
is mind-boggling.
Although and you're just a little aside, but I do think it's interesting how the computers can do so much, but there's something to the feel of, writing the information down and just keeping track of your own charts and updating things every day. As a market analyst, do you have that sense, that that's an
I
important part
write
of your
stuff
process?
down. I write stuff down every day. I have about 3 pages of things that I write down,
Yeah.
partly to transfer into the computer spreadsheets and partly just for information.
So you developed the McClellan oscillator and you said you wanted it to be fast. And it was a enhancement of the advanced decline line studies. So what were you doing with it back then? Were you trading, for a 24-hour period? Were you trying to time the market to get in for a month or a year, or what were you doing with it?
Well, the thing that was done for market timing at that time was to buy mutual funds, and so there was market timing interest by
Hmm.
a lot of people in Southern California uh,
Hmm.
that used the oscillator uh, to and summation index to time mutual fund buying and selling.
Interesting.
That was
So the
its
precursors to
that
ETFs,
was before ETFs were even thought of.
right? And it even got you on TV, as I understand.
Yeah, that there was a program on Channel 22 in Los Angeles that was a precursor to CNBC and Bloomberg and all these other ones that are current.
Mhm.
And
Right.
after the market closed, there was a program that was featuring Gene Morgan called Charting the Market. And one day he said, "Is anybody doing anything interesting with indicators or anything with the market? We really like to talk to you." I
Uh-huh.
was the only one that showed up. So he looked at my work and thought that was really interesting, and we showed it, and there was a very strong positive response from his audience. So, hey, you got to get that on every day. We got to see what that's doing. And so
Hmm.
uh, his wife, Scotty Morgan, and Marian would calculate by hand each day's McClellan oscillator and talk
Wow.
to each other and be sure that they were in agreement that that was the number that was hand calculated. And then that was posted into a chart, and that was shown on Gene's Charting the Market show.
So we are going to get to actually looking at the McClellan oscillator and what it's saying today, and we'll look at it more closely then. So I don't want people to feel like we're not going to go into detail on this, but I just want to continue the story a little bit and talk a little bit. So you developed the McClellan oscillator, which used the advancing issues and the declining issues, and you had two moving averages and you were looking at the distance, between those moving averages, right? And whether they crossed or not.
Well, I want to go back a little further than that.
Okay,
When I
great.
was in the eighth grade,
Oh,
there
love
was
it. Yeah, tell me.
a couple of years after the Second World War,
Okay.
there there was a lot of excitement about atomic energy because of how that ended the Second World War.
Hmm.
And a mutual fund was created that invested in those companies that were going to develop atomic energy power production and that kind of thing. And
Hmm.
so my grandmother, who was a very active, uh, uh, she followed horse races. She uh, bet on
Wow.
the horses
All these
and
market
the
women in
stock
your
market.
life.
And I had an aunt and uncle that were very involved with stock market. So that was part of my history. And so I got a few shares, whatever it was, of this particular mutual fund. And so I had to follow the market to find out what's going on with it. And that was my initial entry into uh, look
Oh,
being personally interested in the market.
I love it. So your grandmother bet on horses.
Yeah,
Did she share with you any of her tips and tricks?
we went to the races at Santa Anita with her several times.
Uh-huh. That's great. And is that what led you into business and economics in college? Was your
And
interest?
so, yeah, that's how we got interested in economics and business administration and stuff.
Hmm.
Uh,
And then you finished and you said, this isn't helping me with the markets. I better come up with something new.
well, actually, after I graduated, I went up to Cal Poly San Luis Obispo and studied engineering for most of a year, and got some other engineering classes. So I have that background also.
Is it true that you actually um, developed and operated a plastic injection molding business?
Yes, yes. Uh, my first job was with Waste King Corporation as a buyer, and then I went to another company and was the purchasing agent for that company, and then somebody that I knew had a business uh, making die casting parts, and they uh, also had a plastic molding business, and that plastic molding business made eyebrow pencils for Maybelline Corporation as their main business, and mascara cases. And he needed somebody to manage that operation, which was down in Culver City, which was half an hour away from where the molding business was. And so I was hired to go down and manage that, and eventually that we our family purchased the plastic molding business from them, and we were very involved in making floppy disk parts,
Hmm.
which was, we made lots of other parts for electronics industry and for aviation and all kinds of things that you would never know about, that were very highly specialized and used engineering plastics rather than anything that we would think about. But we did, we had, uh, we went from around 6 employees when we bought it to 120 people working 24 hours a day, uh, making floppy disk drives.
Oh my goodness. Wow. That must have been quite an experience.
So, and then when Marian got cancer and stuff, we sold that business and shut it down.
Mhm.
And just after the turn of the century.
So when did you first learn about Dewey's work in the Foundation for the Study of Cycles?
I really don't know. I've been thinking about that sometime in the 70s, I believe.
Hmm.
And they sent out uh, uh, messages to just to blast it out. We're doing the Foundation for the Study of Cycles, and we have a newsletter, and we print that out every month
Mm-hmm.
and send it to you. And please join. So that looked very interesting, and I thought I better find out what's going on with that. So I joined the foundation, and I don't know who was running it at the time, whether that was before. I don't know how long Dewey was involved with it. Do
I
you
think he
know?
passed away in 79, and
Yeah,
I think
so
he
I
was,
think I was there when he was. That would have been in the
yeah,
middle 70s.
yeah, I think his book came out around 1970. His
Yeah,
most popular book on cycles. And that probably was one of the catalysts for getting more media attention at the time and reaching more people. So that's probably about when you found him.
yeah. So I never had any contact with him or anything. Uh,
Hmm.
that was before. I wish I had.
Yeah. Good. Well, I know you've prepared a few charts
And
and
then,
yeah, go ahead.
then the foundation under Richard Mulkey, after
Right.
he was gone, uh, came out to Irvine, and then they had meetings every month,
Hmm.
and we went with dinners, and so we'd come and have dinner and have a presentation by different people, and it's mostly by Richard Mulkey, and uh, and then they moved back to Pennsylvania. Well, that we our people, we had about maybe 40, 50 people that really enjoyed getting together. So we continued with the West Coast Cycles Club after that.
Right. So you're still basically continuing that tradition today with the West Coast Cycles Club. Is that right?
That's correct.
And so if anybody is on the West Coast who wants to,
Or online, we're doing it online now. So
right,
anybody can join us on the last Tuesday of the month at 1 o'clock.
absolutely. So I know you've prepared a few slides, Sherman, and it would probably help to get some visuals at this point. So
Good.
our
Let's do that.
so we can look more closely at the indicators that you developed and of course what they're showing about the markets today.
All right.
Ah, what a great picture.
This is
Beautiful.
this is the team that it took to. Neither one of us had all of those tools and the knowledge and of what it took to create the McClellan Oscillator and Summation Index.
Mm-hmm.
And it took calculus. Uh, those indicators are calculus for people that
Mm-hmm.
don't that
Right.
never got to that stage. And
Yeah.
the summation is the area under the curve, and there's second derivative, and that's stuff that I don't even know all about. But it took her abilities in the math and took my abilities with the market and economics and how we could do it.
Mm-hmm.
Here's the advanced decline line,
Yes.
that this famous advanced decline line. And we had on the left side of the chart, there's some negative action in the 2015-16 area. And then it took off and had a very long run above the 1% trend there in the blue line. And then a correction in 2018 when the Fed was having quantitative tightening, and the little bump right in the middle down to the blue line is the crash for COVID, which
Is that
doesn't look
something you
like
can put
very
your
much there.
cursor? Can you put your cursor on that, Sherman, on the screen?
Right here.
Right there. Okay.
That's the 2020 COVID crash.
Uh-huh. Okay. So just to be clear what we're looking at here, so I think in the black there's actually
The
two
black is
different two different lines there, right? First is the literal cumulative advanced decline line. So it's
Yeah,
the number of advancing issues minus the number of declining issues, and then you just, add that number up from day to day, right?
right.
So, um, in let's say right before the COVID crash there, it looks like it was at about 480-ish, right?
Yeah,
And so that means that uh,
1,000, I think it is.
480,000, right? So the
But the scaling
cumulative.
is just our arbitrary where we started with it.
Hmm. Yeah. Do you remember
And
where you started with it, or does
uh,
it matter?
I don't know.
Okay.
Uh, probably zero.
All right.
I don't
But
know.
there's also like a kind of, I think the 5% trend line is in there too, right?
Yeah,
So
they're
it's
all
kind
mixed
of
up together because this is a fairly tight chart.
right. And so the 5% of trend, can you talk a little bit about these percent trend indicators? Because they're not exactly moving averages, right? What does it
They
mean to
are
be
called exponential moving averages,
okay?
and the 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 10% trend moves uh, 1/10 of the distance between today's uh, value of advances minus declines and wherever the previous day's number is.
Okay.
So if you had 100 more advances and the previous day was zero, it had moved 10 points,
Hmm.
and the 5% trend would move 5 points.
So the 10% trend is kind of a faster, the
So
bigger the number, the
it's
faster
equivalent
the
to the 10% is equivalent to about a 19-day moving average,
exponential moving average.
just a regular moving average.
Okay. Okay. And how about the others, the
And the
5% and the
5% trend is around a 39-day moving average. If you
1%?
calculated a 39-day smooth moving average, it would be roughly equivalent to a 5% trend, but it
Okay.
wouldn't be as responsive.
And the 1% trend?
And the 1% is about 189 days, so it's very close to a 200-day moving average.
That's
It's a
interesting how
little bit faster than that.
all of them are just a little bit faster than some of the more widely used,
That's,
numbers like the round
yeah,
numbers, right?
that's
So you're
correct.
you're jumping the gun just a little bit.
Now, there's one other thing I'd point out here that
Hmm.
when the advanced decline line is below the 1% trend, as it was here in 2022 and the bear market, it stays, the advanced decline line is basically below the 1% trend. So that's a bear market type of condition.
Hmm.
And we saw it over here in the 2015 area to 16. And
Okay. So what is this telling us about the markets today?
but but this large advance is quantitative easing and quantitative easing and quantitative easing and
Hmm.
inflation.
Hmm.
So the this particular picture of the advanced decline line is not what the advanced decline line looks like under stable conditions, where it just goes up and down and up and down. And
Right.
we looked at the period prior to that, it would be a very different looking uh, indicator. So,
Okay.
and then this last move up is very interesting because this top was made in November, and the top this year was a lower top, and so this created a divergence, uh, just as we had created a divergence at this point before the bear market in 2022. So we have the setup for this to decline below the 1% trend, and if it does, it will uh, it'll do away with the 10% trends, 10% declines in price that we've seen on some indicators this year, and it will look more like in the 20 and percent or maybe double that.
Mm-hmm.
Over
So
the next period.
earlier in our conversation, you mentioned that you were looking for ways to um, enhance the predictive power of the advanced decline line. Would you say that those kinds of divergences were one of the main tools that you found that you use?
It's it's one of the things that we've seen, and we've seen not only this divergence that I just pointed out, or the two of them, but we've seen it in many other indicators. There's about uh, more like a half a dozen to a dozen divergences that are showing up.
Mhm. So the way that you're using this, you're watching where it is relative to these three different trend lines.
Right.
You're also looking for divergences from price. So, price
Let me
may
go to the
have made
next
a new
chart.
high, but the advanced decline line did not make a new high.
Let me point out, I didn't show that in this presentation today, but
Mhm.
this peak that we had in 2000, at the beginning of 2022, and at the end of 21, that peak on the weekly advanced decline line has not been exceeded. So this high was on the weekly advanced decline line was just below that peak.
My.
Much, and so there's a huge divergence on the weekly advanced decline line.
Hmm. That sounds concerning.
And I've drawn a trend line across the lows back to the COVID low,
Hmm.
and that might be an objective for the advanced decline line over the next year and a half or two. And so if that is the case, the only way it can get down to that is by going below the 1% trend. And that requires a bear market. So that's not a possibility that we'll be watching to see if that is what we really get out of it.
Hmm. So is this the McClellan oscillator,
The difference
or is this
between
just the advanced decline line, cumulative
the
advanced decline?
difference between this moving average and that moving average is the McClellan oscillator.
Gotcha. Okay.
And you can't see them on this chart. And I don't even have a chart of the oscillator itself, but I'll show you how the oscillator's numbers develop into the summation index.
And so why are you, if you go back to that chart for just a minute, so why did you want to look at the difference between the 10% trend and the 5% trend?
Because that's the value of the McClellan oscillator.
And what does that predict
And
for
each
you? What
day
is,
oscillator value is uh, changed. The summation index is changed by whatever the oscillator number is.
okay.
So when the oscillator is positive, the summation index is going up. And when the oscillator is negative and the 10% below the 5% trend, uh, which is quite often, then the summation index is declining.
So the 10% trend is the fastest. And if
Yes,
it's above the 5%, then that oscillator value is positive. And if the 10% is below the 5%, then it's negative.
that's the case.
And then you just add those up. That's the summation index every day when you kind of add those values up day after day after
Right,
day. And we haven't talked about the summation index yet, but
right.
look forward to it.
So
So here it is.
here it is. And as you can see, there's lots of volatility in this indicator.
So we're
And
looking at
if the oscillator is positive, then the summation index is rising. And when it is below the zero line or the neutral level here, which is at 1,000, and that was originally we started with it at zero, but it was too hard to calculate negative numbers by hand for many people that wanted to follow it. And
Uh-huh.
so we moved it up to 1,000, and it very rarely goes below zero. And when it does go below zero, which is really minus 1,000, uh, it, uh, that's a rare event, several
Mm-hmm.
years apart. And so you don't have to deal with it very often. And you only deal with that when the market is really in trouble.
Mm-hmm.
So, uh,
So give us tell us a little bit about what you see in this chart.
uh, let me start over here at this. This is finishing up a very negative summation index,
Mm-hmm.
minus what is it, minus 1,000,
And that was in 2015,
and that's in and it, early 2016,
early 2016. Okay. What was going on then? Do you
and
remember?
quantitative tightening
Mm-hmm.
was going
Okay.
on, and that created this condition for prices to be declining.
Mm-hmm.
And
Right.
then uh, the Fed said, no, that's not what we want to do. We're going to have quantitative easing. So the summation index well, uh, went up to a level above this horizontal dashed line across here
What a
and
wild swing.
way up here, and had very wide spacing of the dots
Ah,
as it advanced. And
wow.
this shows initiation. And when it gets to a very high level, this is the beginning of an initiation for this whole advance.
Ah, huh.
And then it went up above it again, saying, yes, we're really interested in going higher. And
Well,
then, of course, as soon as that happened, we went down to the bottom again. But as it stayed above the neutral level here for quite a long time, it had quite an advance. And then we had a price high and a, a lower summation top, creating a divergence condition at this point.
mm-hmm.
And that began a sideways market and
Okay. Can I
until,
ask you a question, Sherman?
sure,
So if we go back to that first um,
this phase,
acceleration right here, right? So you had
yeah,
the quantitative easing start, you had all of those, you know, so every day more stocks were going up in price than going down in price, right? And that
yes,
kind of really accelerated. What's fascinating to me here is how that acceleration peaked very early on in what was then a major bull market for a few years.
right.
So what, if what's making price go up there, if it's not, more stocks going up than going down, right? Like
Right.
why does price keep going up, but the summation index doesn't keep going up?
Because the oscillator is measuring acceleration,
Okay.
and the
Right.
summation index is being driven by that oscillator showing acceleration. And so it's also showing acceleration. And so this
Oh,
is an acceleration measurement. And then this positive action following is all momentum from that
right. Okay.
initiation of an advance.
Right. And momentum is kind of like, I mean, going back to the calculus, the first derivative and acceleration is the second derivative.
Yeah.
So the summation index is really showing us those times of acceleration that more than likely are going to lead to big trend changes.
And we have the same thing here in 2018, 19.
Hmm.
And uh, again, we had a very huge advance showing great acceleration. And
Hmm.
indeed, we continued on up until 2020 from that. And
Yes.
within the summation index spent much time above its neutral level in rising bottoms. And then when it broke that rising bottom structure in COVID, it
Mm-hmm.
it told you within
Mm.
a day or two that you had problems.
Uh-huh.
uh,
Right.
and the problem went on all the way down to here.
Oh my goodness. That's incredible.
So, and when that turned up again, that was the bottom. And then we had, came all the way up to here and had not a higher above it, but certainly up to the horizontal line here, showing that yeah, this is has legs on this move,
Right.
and
It's sort of the acceleration gets you up to a cruising speed, and then that cruising speed is your momentum
that's right.
going forward.
So this acceleration phase shows don't expect that this is the end of things. This is the beginning of things, and you
Right.
want to look for where when it pulls back
Mm.
and turns up again from a lower
Mm-hmm.
level. Uh,
Mm-hmm.
you want to be involved with that on the long side.
Gotcha. And do you look at the distance between the dots? Do you analyze that? Like when you get
Those
those big
the distance
steps?
between these dots are what the oscillator value is.
Okay. And so when you
And
see a
where
big
you see
oscillator
these large
value,
large distance between, those are very high oscillator numbers, up around 250, 300. Uh,
mhm,
and when you see these large dots going down, those are minus 250, minus 300, minus
okay.
400.
Wow.
So those tell you that there is acceleration and power in that particular move. And
This
it's
is so helpful,
cyclical.
Sherman. I'm understanding this much better now.
Now, when this whole topping structure here was says very strong because it remained quite a long distance between the bottoms and the neutral level. And so this reemphasized that this quantitative easing phase was still powerful.
Mm-hmm.
And then when it came down to below the neutral level and created a lower top, that top was associated with this first top. And then we had an even lower top, and that was associated with the top. And then you turn down right
Mm.
at the neutral level, and that's when this really got started on the downside in
Mm-hmm.
2022.
Mm-hmm.
And then that finished out. We got it. This this failed to get up to the acceleration phase that says we have continuation going, and
Mm-hmm.
we indeed turned down at a lower high than the previous high here, and made a lower low, and then we got acceleration enough to get up above this dotted line. That's a
Mm-hmm.
separation from that tells us yes, we've got something really important going on, and
Mm-hmm.
but it took quite a bit of time before it mattered,
Mm.
and it took the bottom in here, and that
That
created
was
a
the
trend line.
22 bottom, the late 22 bottom.
Um, this is the late 22 bottom,
Oh, okay, there it is. Yeah.
and this is the bottom in 2023, around
Mm-hmm.
September, third quarter, fourth quarter of
Right.
23, and they advance, and that gave us enough that says yes, this advance is going to have legs,
Mm-hmm.
and indeed we stayed above the neutral level, and then we had a final push over here, and that push is about in the middle here, probably about here, and then this top in the fourth quarter was associated with this much lower summation top, creating a huge divergence.
Mm.
And then that came down and was supported on this uptrend line across the lows from the 20 22 bottom,
Mhm.
and it created a lower top in this year's top, and
Mhm.
that the February top was a lower price on the New York Composite. However, the S&P 500 made a slightly higher top on February 19th.
Right.
And but well, along with the divergence, and it was the only indicator that made a higher high in 2025 than 2024.
Mm.
So we're coming down now, and we're still continuing to decline, and we'll find out whether this across
And
the
we're
bottom
below the neutral
holds or
line.
whether it's going to go even farther down.
And we're below the neutral line, right?
Yeah, we're below the neutral line, and uh,
Yeah.
how low is low? We're going to
Right.
find out. We're still going down.
Okay.
We're down 400 points today on the Dow, 500 earlier.
My goodness. Okay.
So we're taking out this January low.
So and again, this is just on the New York Stock
The
Exchange
New York
Composite,
Stock
right?
Exchange Advanced
Because that is the index that
is the
has the
driving
most,
data that drives the McClellan Oscillator calculation.
and you use the New York Stock Exchange because there's the least churn in that index. Is that right?
Well, it's the broadest
Broadest.
index.
Mm-hmm.
There's like 1,500 issues in it or thereabouts,
Okay.
and there's only 30 Dow stocks, and there's 500 S&P stocks, and there's 100 NDX stocks.
Mm-hmm.
So
Right.
we're interested in what the really broad market is doing, so that's why we use it as a comparison
Very good.
a bunch of the time.
All right. Well, that was a master class. Thank you. Did you have any other charts you want to look at?
Yeah, we're going to look at this one,
Great.
and this is the volume summation index.
Okay.
And it behaves slightly different from the AD summation index. Now, over here, we saw acceleration to a high level, saying this is an initiation.
Can I just
Was
ask
confirmed
for what
by the volume summation.
so it's the volume, like the
So we have up volume,
up volume minus down
we have down
volume?
volume, and the difference between them is what drives the daily volume line.
And is that basically every trade is either, higher or lower, and
Well,
that's how
for
you
that
measure?
particular day,
Mm-hmm.
they close higher or lower, and if the price changes up, if the price is up for the day, that volume is all counted
As
as enough
up volume.
volume. And if
Okay.
the price is down for that day, all of the volume going into those stocks is,
Okay.
is the down
Got it.
volume.
Got it. Thank you.
And so we use the same calculations of 10% trend, 5% trend to
Mm-hmm.
calculate the oscillator using just the volume data and
Interesting.
summation index. So this is what the summation looks like for volume. So
Okay.
we got a good confirmation out of this that this move from very early here has legs. And
Mhm.
indeed, we had very, very small dips below zero on this indicator, and the neutral level is zero.
Mhm.
And then as these tops had slight declines,
Mhm.
it was losing some momentum or showing a loss of momentum, but it was still very powerful.
Mhm.
This part of it, we had a bumpy up condition where
Mhm.
the each high was higher than the previous one, rather than
Right.
being lower as it would be in a strong normal. So this
Hmm.
rising tops condition is a weak condition.
Oh, fascinating.
And
I wouldn't have
as soon as
intuited that.
this accelerated move up turned down, we see very large dots. So the very large volume taking place to the downside
Mm-hmm.
immediately.
Mm-hmm.
And this is like 1, 2, 3, 4, 5, 6, 7, maybe 8 days. So that's like a week and a half. You did all the damage. That's
Yeah.
why we had to have something that told us within a day, approximately, that we have a trend change, so we
Right.
can participate in that kind of a move.
Wow.
So that's why
Yeah.
the
Okay.
oscillator is using exponential moving averages rather than just plain old moving averages.
So once you saw, one or two of those big steps down, you said, and you
That,
saw that there were kind of a rising series of tops
yeah,
in the
as soon as
volume
that turned
oscillator.
down, we knew
You
there's a
said, got to get on this
because you're up against
elevator going
this
down.
this high level.
Uh-huh. Okay.
Although this line wasn't established yet, but it
Mm-hmm.
was established by these other tops. And it's in this vicinity of where tops are made on this
Mm-hmm.
indicator.
Okay.
And then this is 2018-19, which was quantitative tightening situation. So, and we came down to a very low level. And then we came back up and touched the line and said, yeah, no, this has got some legs. And it did until it got over to here. And then we had COVID. And this is the COVID crash. And we'd never seen this indicator go this low before, ever. We
Yeah.
thought maybe if it got down to here, it would be all done wrong. It
Huh.
had,
And look
it
at those
had,
huge steps. The gaps in the oscillator are
yeah.
just
And
off
this
the
price
charts there.
low, of course, took out this low over here.
Right. No, I
So
remember
we
it
faced
well.
all of this advance that took place.
Oh, unbelievable.
And then we had acceleration matching the advanced decline summation, showing above the dotted line saying this up move has legs. It's not all done. We're not just going to rally up here and fail. And we did. It took some consolidation, but all that was is consolidation in the same area where it did before. And then
Mhm.
it broke out with a new acceleration phase that said, yeah, we're going to do great things.
Mhm.
We had declining tops, which says this is a strong market, and uh, still declining tops until we got over into here. And then we spent a long time below zero. And in this 2022 bear market, until we started having increasingly higher tops until we finally got an acceleration move above the dotted line that says, yeah, this is something that's more important. And so now uh, we
It's
have
so
a,
interesting to me, Sherman, to see how you can have the oscillator or the summation index below zero, which kind of means distribution is happening, right? There's more
that's correct.
selling going on behind the scenes, even though price isn't moving down sharply yet.
Yeah, but you can see these large dot spacings on the way down. Those
Sure.
are very negative oscillator readings
Yeah.
that changes. And this is why I didn't show the oscillator itself. It's a very busy indicator, and
Hmm.
and this shows what the this distance between the dots shows what the oscillator number was very negative.
I was thinking more around kind of is that 21, 22 year there where price was still at its highs, but the oscillator, or the summation index was below zero. Yeah, right in
Yeah,
there.
yeah,
So you had that kind of, it's almost like stealth selling going on behind the scenes, even though
right.
price isn't really
All of these
tanking yet.
all of these declines continued going down,
Hmm.
and until all of this negativity took place in
Yeah.
distribution.
Yep.
And
Interesting.
now we have an uptrend line that I've drawn in, and
Yes.
lo and behold, our current condition is dropping. We're down below zero now on this indicator for the last 4 or 5 days, and we've taken out. We have lower lows all the way across here, as this advance was running out of steam, and we now have a lower summation volume summation high at the peak in this year compared to the peak, and that did not make a higher high on the New York Composite. And now we've broken this uptrend line, and we're into negative territory. And how far down is, maybe somewhere around where these are. We'll find out.
So would you call this picture very worrisome, slightly worrisome?
What it says is that this top is a very important top. And this, all these dots are showing that the oscillators being very negative, and that's going to take some time. This is a major consolidation at the very least, and if we get below the 1% trend on a daily AD line, we're into bear market conditions. So that's what how far down is, we don't know.
Okay.
But it's in the process of being down.
Wonderful.
What is the title on this chart?
This is the Dow Jones close and price oscillator.
All right. Now this is the last chart that I'm going to show you, but it's a very important one. That if we use the closing price for the Dow to drive a 10% trend and a 5% trend, and take the difference between them, which is a McClellan oscillator for the price, then we get this price oscillator. And a price oscillator looks very much like a summation index. And if we use the daily change in price instead of the price itself, then we would wind up with a picture of what a McClellan oscillator would look like. So this really is a summation index equivalent, but we call it a price oscillator because it moves like an oscillator, and it's driven by the closing price on the Dow.
In terms of percentage change.
So we see again when this is going up, we have price increases, and when this is going up, we get price increases, and when we get this, we get price increases, and this is making higher ones and higher ones as this goes on up. So and this downtrend came across, and we took that at the bottom in 2019, and lo and behold, we came down and hit that line again in 2022. So it was an important line. And then I've drawn another line across from the COVID low across that 22 bottom, and that goes on up, and the price high on the Dow was in the fourth quarter last year, and that was made with a price oscillator at this level, and we did not make a higher high this year on the Dow Industrials, only on the S&P, and we had a top on the price oscillator that came up and hit that line precisely after the drop to the January low on the price oscillator and the price. And then we came back up and hit that line. So this is an indicator that has relations to the COVID bottom and the bear market bottom in 22, and we came up and hit that line at the January, at the February high,
right?
Which is also these two tops are associated with a 41.5-month cycle or 180 months, 186-month cycle, or around there.
Yeah,
And
186
so
weeks.
that's why we're interested in what is going on at a cycle peak. And if you drew a line across these highs, they'd be right on a line. So,
right.
But I find it very interesting that here's an indicator that can relate the COVID bottom and the bear market bottom in 22 and the high price at the beginning of 2025.
That is very interesting.
And now you can see there's wide separation of the dots.
Yep.
And today's down, we're down 458. So this is going to continue. Another dot right in here. I don't know that we'll go down and hit this line, but we are down taking out these lows. So something important is going on, and this decline needs to be taken very seriously.
And it's going to take a lot to recover from it.
This is what McClellan Oscillator and Summation kind of things can tell you.
Fantastic. Well, that was very helpful to me, especially the part to understand that this is really about acceleration, right?
Yeah.
And that most people aren't
acceleration by how far the dots are apart.
Yeah.
And we're measuring momentum by how we're relating to the zero line or the neutral level, and whether it's staying mostly above or whether it's staying mostly below. And how it changes direction is important, and how much direction change you get is important.
I'm seeing Marian's influence here and Marian's hand and all the mathematics behind the scenes.
You can see why these indicators are extremely useful in conjunction with cycle analysis.
Yes.
Because we have cycle bottoms that are important, and we have cycle tops that are important, and we can use these indicators to determine, are they behaving properly? Are we having right translation or left translation according to the price structure in relationship to where the cycle tops are?
We could take a quick look at that on the cycle analysis tool on the Dow if you'd like to.
Fine. So
do you have any, was this the last chart that you had, or did you have another?
This is the last chart.
Okay, except I think you did have one more. If you could go to the last slide, just to show where people can follow your work and subscribe to get the analysis of, this is a family business, right? Tom McClellan, your son runs the McClellan Market Report.
Tom and I, Tom graduated from West Point and flew helicopters for the Army for a few years. And
I did not know that.
And he ran a helicopter repair facility over in Buttingen near Frankfurt, Germany for several years. And after the Gulf War, they said, here's some money, please go away. We don't need you anymore. We're not going to have wars anymore. And
Is he getting any calls back lately?
Came back, and we spent about 2 or 3 years developing all the indicators and computer program spreadsheets that we needed to get started with writing the McClellan Market Report. And in 1995, we started that, and he does most of the writing and preparation of it. I do a lot of the background work, and I write some of it. We began offering a free chart and focus quite a few years ago.
Yes.
And it's not going to tell you about market timing, but it's going to tell you about interesting things that are going on in the economy. it'll tell you, uh, uh, for instance, here's leading indicators for unemployment.
Hmm.
And it'll have a chart showing the leading indication for that, or how gold is a leading indication for
Yeah,
different commodities and that kind of thing. So it's free. You sign up for it on the website
great.
at
Yeah,
mcoscillator.com.
folks, I really, I've been a subscriber to the McClellan Market Report, and I think it's clear from this presentation that really the McClellan Oscillator and the McClellan Summation Index are unique indicators that are really giving some insights, beyond just momentum. Everybody looks at momentum, but as, looking at acceleration, which has really been the eye opener for me today. I mean, I intuitively had a sense about it, but really hearing you explain it was so helpful to me, Sherman, to really understand that this is getting at acceleration to kind of complement momentum. And of course, momentum is the first derivative of price, right? And acceleration is the first derivative of momentum. So you're really getting ahead of momentum almost with
That's what
these
we're trying to do.
summation
We want to be able
tools.
to see when that transition at a cycle top or a bottom has actually taken place, and there's acceleration in the new direction.
Yeah, I mean, at a minimum, you got to subscribe to the monthly newsletter. If you're a trader, you can go for the daily report, but the monthly report is so helpful. And you can sign up for the weekly chart in focus for free and just kind of stay in touch with what you and Tom are seeing. So thank you very much for that. I'm going to take over the screen now. We'll look at the cycles tool and just wrap up here. So this is the website for um, the McClellan Market Report. It's at mcoscillator.com. And I think if you want to subscribe, you can find your way around the site. Going back to the cycles analysis, though, I'm going to move this off here. And of course, this is the made famous by Dewey, the 41, 42-month cycle, also known as the 180 to 185 week cycle. And I have it on the Dow here. So this is weekly data on the Dow, Sherman, going back to, I took this back to 1992, right? And we can see that we currently are at a significant cycle top. The foundation's momentum indicator, let me just make this a little bigger here. This will do it. Nope, it's up
Be so happy when we get
here.
really dates that we can really read.
Well, I just enlarged it. So we're at the cycle top, right? And the momentum here is deteriorating. And then what we saw today from what you just showed, that negative momentum is accelerating.
That's what it's doing.
So if we
Almost there.
combine the cycle analysis with the summation and oscillator analysis, what we're seeing is that, we're at a cycle top. So some downward acceleration here would not be totally unexpected, and both the summation index and the cycle analysis is suggesting this is a top to take seriously.
And it doesn't end until the end of 26. Same
On the
for
weekly data,
gold.
right? So we could easily see, declines into end of 26,
Yeah.
early 27.
So this is what to look for the next couple of years. Is very choppy market.
Mm-hmm. All right. Well, Sherman, thank you so much. I understand. I'm really looking forward to being together with you in person in New York in June at our first in-person live conference for the Foundation for the Study of Cycles, back like when they used to have dinner together, right?
I think so. And
So, do you have
we'll go
anything
over
in?
some of this in more detail with the group if they're interested.
Yes, we're absolutely interested. We're thrilled that you're going to be able to join us and really looking forward to it. I actually would love to set something up. Maybe, there's the Wheeler work is at Baruch College there in New York. And I've been meaning to ask you about this, if maybe we could reach out to the MTA or the CMT and find out about maybe getting into that library and looking at some of the the um, the Wheeler and other technical analysis work there while we're in town. Do you think that might be a possibility?
It's a possibility. You want to do that before the conference then?
Let me circle back on that with you, and we'll see if we can set a date. And then if you would reach out to the MTA on our behalf, that would be fantastic.
I'd be glad to try and set that up.
Thank you so much. So one closing question for you. There's a lot of young people interested in markets today, and a lot of activity, not just in equities, but in cryptocurrencies, et cetera. And I wonder what, a market veteran with your experience, what would you be doing if you were 25 years old today and just getting interested in markets?
Uh, the advice that I would give to anybody is the bromide of trade with the trend. How do you know what the trend is?
Mhm.
Well, you've got a summation index that's telling you what the trend is, and it doesn't lie.
Mhm.
It may be confusing at times, but it doesn't lie. And the confusing some maybe because the market's confused. And but that is a one way to know what the trend is, so you can trade with the trend direction. And we have tools now with inverse ETFs and other kinds of things that we didn't
Right.
have in the old days. Uh, and we have zero cost of trades now that we didn't have in the old days. We had to make a point in order to cover our costs of trade, our 2 points.
Right.
And when I was in college and trying to trade, and
Yeah.
so we have amazingly better tools now to work with in computers and
Mhm.
cycle analysis programs, and that can tell you here's where you when you need to pay attention, and here's
Right.
indicators, technical indicators that can tell you that yes, this is the time when that is taking place.
Can you do that kind of price oscillator analysis that you did on the Dow? Can you do that on any asset?
You can do it on any data series you want to use it on.
Hmm. Very
And it doesn't
interesting.
care.
Yeah, I mean that you've really driven,
All it does is tell you acceleration and momentum.
and that acceleration is really the key
And that
ultimately to
acceleration
detecting trend
is what
changes.
acceleration is what you need to know at at turning points.
Right. Which is what cycles are about too.
And cycles tell you when to look for those turning points,
Right.
approximately. And the
Fantastic.
cycles expand and contract a little bit, but the oscillator doesn't. It responds only to direct price action or indicator action, whatever
Hmm.
data series you're working with.
Well,
I
Sherman,
use it. I use it for corn, and I use it for wheat, and I use it for. I used to use it for pork bellies, and used to use it for potatoes. And
well, I'm going to be a different trader tomorrow than I was today. So I thank you so much for this great interview, Sherman, for all your time and mostly for being such a friend to the foundation over the years. Thank you again, and really look forward to spending some time together in person in New York in June.